Hello, this is Matt on the Moon Lambeau channel. The Bank for International Settlements said a number of interesting things in a report issued just the other day. Definitely bitching up a veritable storm about Bitcoin and its energy inefficiency and a number of other things. Talking about crypto asset classes, cryptocurrencies that are decentralized by nature, how they're just speculative by nature, and I've got something to say about that. But really, most of the negative focus was on Bitcoin, and they did delve a bit into, and I think rightfully so, the state and governance of stable coins. But you know what's neat about all this? XRP specifically, because I got to say this too, they are gung-ho, it seems, on the idea of central bank digital currencies being the new standard for how money moves around the planet. But understand, like, XRP is perfectly positioned to glue all of this together, right? Because these cryptocurrencies and central bank digital currencies and the stable coins, they don't talk to one another. They do not bridge to one another. And there are so many different stable coins and cryptocurrencies, and there will be so many central bank digital currencies, you're not going to have markets made for every single one of them. But if you have a jurisdictionless and permissionless cryptocurrency like XRP that has sufficient liquidity, and it's already on exchanges the world over, and it's blazing fast, technologically sufficient for the use case of a bridge currency, my gosh, what do you think is going to happen? Because something has to bridge all of these things. It's not just going to magically happen. And my bet right now, it would be on XRP. And Ripple sees this too, which is why I want to offer a quick reminder. But look, before I go any further, I do want to be clear at the outset, I don't have a financial background of any kind. I am not offering financial advice, and you should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who likes making YouTube videos as a super duper fun hobby, but that's all that's going on here, damn it. Do you guys remember me covering this from Ripple's official website? So this is part of their blog series, Ripple Insights. And it is from March 3rd of this year, 2021, and it's titled, Ripple Pilots a Private Ledger for Central Banks, Launching Central Bank Digital Currencies. And again, to be clear, and I'm just going to be brief on this portion because I need to set the table properly before going further so that you guys understand how important all of this is for XRP specifically. But central bank digital currencies, they're already out in the wild. They do exist. The first one was launched in October of last year. It was the Bahamas, actually. They launched the first market-ready central bank digital currency. And this is the direction that everything is going. We're entering an increasingly liquid world. Ripple sees all of this. And so what they did actually, and it's so amazing to see today, it's like because their plans coming together. The Bank for International Settlements, all on board with central bank digital currencies. Like I've been saying, it's coming. Ripple's seen this. And so I wanted to cover just a small portion of this piece because they created a central bank digital currency private ledger. So it's basically template software. And then central banks can take this software that Ripple created, and this is separate from the XRP ledger. It's separate from XRP, and that's a good thing because, look, banks are not going to launch a central bank digital currency on the XRP ledger because they need their own special permissions. It needs to be centralized. They need to be able to roll back transactions if they want to. They need to be able to endlessly print their fiat currency, like whether it's the dollar, endlessly print the dollar. I know it's stupid. That's what they're doing already. So it's the same monetary policy that's flawed. It's just a new digital form of it. But they want these special permissions on their private ledger. And so what Ripple's done is they've taken all the awesome blazing fast speed, all the awesome technological attributes that a central bank would want, and then just made it so that you can have a centralized version of that, separate from the XRP ledger, separate from XRP. And so they created actually a template that's blank that can be modified by the central banks. And it's just a central bank digital currency private ledger. And so here's what they wrote about it. Here's the plan. And this should make you excited if you're an XRP holder because utility matters. If you're talking about the long-term viability of XRP, it needs to be used for something. This is part of the plan. They state it here. Let me read a couple sentences and you'll see what I'm talking about. The central bank digital currency private ledger is based on the same blockchain technology that powers the XRP ledger, which means that the central bank digital currency private ledger is built for payments. Now, this also means the central bank digital currency private ledger is designed for issuing currencies, with over 5,400 currencies issued on the XRP ledger over the past 8 years, including its native digital asset XRP, which can be leveraged, here's the key part, which can be leveraged as a neutral bridge asset for frictionless value movement between central bank digital currencies and other currencies. There you go. Ripple on the cutting edge. That's my golf clap right there. Ripple on the cutting edge, seeing the way things are going and positioning XRP perfectly. And so they're so laser focused on their mission here, and they're seeing all of this unfold. And it's amazing how things just come together here. It's almost like Ripple gets the bigger picture. Like they're the adults in the room, and they're not saying down with banks and down with government. They're working with banks and with government because they're not going away. And that is appealing to me as an adult. And so into this piece now from CoinDesk titled, BIS says Bitcoin has few redeeming attributes. And so there's three key things that I really enjoyed from this article. Yes, we are going to get to the part about central bank digital currencies, what they had to say to that, but also what they had to say about Bitcoin and what they had to say about stable coins. The Bank for International Settlements, which is BIS for short, it's the organization that represents most of the world's central banks, panned Bitcoin in its annual economic report, saying the cryptocurrency has few redeeming qualities. It's so hilarious to me. I kind of want to say, look, mind you, I hold Bitcoin and I'm critical of it as well for a number of reasons here. But as far as few redeeming qualities, like some of the stuff that they were stating here, like actually, let me read a couple more sentences. I'll say what I want to say, but check this out. The bank offered a stiff criticism of Bitcoin and cryptocurrencies in general in a chapter from the report published Wednesday, ahead of its full release on June 29th. Cryptocurrencies are, quote, speculative assets rather than money, end quote. And so I read that and I was like, okay, all right, there we go. There's the narrative. It's down with Bitcoin, down with cryptocurrencies. Okay, decentralized bad, apparently. A lot of these banks, they do see decentralized cryptocurrencies as a threat, right? Because they want to be able to abuse monetary system that they're in control of, that people are subject to. They don't like that there's an alternative. That is true. But when they say speculative asset, I'm looking at how many United States dollars are being printed, like trillions of new United States dollars over the last 12 months. It's just money printer go burr, right? Endlessly debasing the United States dollar. And that's just one fiat currency. And so when they're talking about cryptocurrencies as a speculative asset, I'm kind of sitting here thinking, like the United States dollar is starting to feel like a speculative asset a little bit here. I'm like, and plus we know that its purchasing power is decreasing dramatically every single year thanks to inflation. And then they cite that they're used in many use cases to facilitate financial crime such as money laundering and ransomware attacks. Now that's disingenuous, and I hate hearing that from the Bank of International Settlements because that's just factually not in line with reality. So. The vast majority of nefarious activities that occur on the planet, they're paid for, with fiat currency. I mean, if you really want to evade the system, just use printed dollars. And I'm not encouraging anyone to do that. I'm saying if you're going to be a jackass, maybe do that instead of utilizing Bitcoin, which is a public blockchain which you can track. Same with the XRP ledger, public blockchain which can be tracked. You can pull up any transaction on the XRP ledger, and yes, names are not attached to it. Of course, I get that, but you can see where the transactions flow, what endpoints are they touching, what cryptocurrency exchanges are they going to, and you can figure stuff out. You can tie it all together, right? So anyway, and then Bitcoin in particular has few redeeming public interest attributes when also considering its wasteful energy footprint, the report said. Now look, on the wasteful energy footprint part, yeah, it's nonsense, but this is what the market has adopted, and people honestly in general don't care. And so this is not something that's going to stop Bitcoin. And so it is what it is. I still think it is a fair critique, but it's not going to stop Bitcoin. And people are finding ways to get around that bad-sounding narrative so that they can adopt it, whether they genuinely care about the energy waste or not. They're still getting around the narrative. Now, the report arrived less than 2 weeks after the BIS Basel Committee indicated the risk level it assigns to crypto assets by proposing that banks with exposure to them set aside capital to cover any losses. Stablecoins, which are designed to be less volatile than any other crypto asset by being backed by fiat currencies, also came under scrutiny. The report called them an attempt to import credibility and said that they are only as good as the governance behind the promise of the backing, and that they threaten to fragment the liquidity of the monetary system. Now, actually, honestly, that I can get behind, because I'm not against stable coins, just like the concept of them existing. I'm actually not. But you need transparency, and we do not have that today. Whether you're talking about Tether, USDT, or USDC, pick your stable coin. We don't have full transparency. Like, to what degree they're backed, you frankly don't know for sure. You see all of these new coins entering the system, and somebody's using them to buy stuff. You know how that impacts supply and demand, right? And so I'm not against them if properly governed, but it is true that they're attempting, as they wrote here, attempting to import credibility, because it sounds like the dollar, or pick whatever stablecoin you're using. I'm on board with that, and I actually have the same critique about this stuff. I just want proof. If they are legit, fine. I'd prefer they be legit, but prove it. Why aren't you proving it? That makes me concerned, the fact that they're not. They're just not open, they're transparent. There isn't a third party that is actually auditing these. And to me, that's a serious problem right there. And so you have trust issues. That's another reason when people talk about, the idea of not needing XRP as a bridge currency because you can use a stable coin. I'm like, oh my gosh, even if it's the most blazing fast, incredible technology in terms of speed and it doesn't waste energy, even if it has all these awesome attributes, you're not solving for trust. Like, you're definitely not solving for trust. Are you going to rely on the way the world moves money around on this stable coin that isn't even audited by a third party, which could crash at any time technically? Like, are you going to risk the entire global money flows? Like, no, that's not ever going to happen. And even if trust weren't to happen, that's a major problem there. But even if it weren't a problem, then you'd still need somebody to implement this, onboard customers, offer customer service. What the hell is the business model for that? So look, stable coins are not going to be used in place of XRP. It just makes no damn sense. That's what Moonlambo has to say about it here. Then there's this little subheading: central bank digital currencies moving from concept to design. Cryptocurrencies and stablecoins are highlighted as part of a triple-pronged threat to mainstream financial services alongside disruption by big tech. The BIS set 3 threats against the backdrop of growing interest in central bank digital currencies, which have drawn the interest of most central banks around the world. Central bank digital currencies are moving from concept to design, the report said, and could reshape the institution of money. And so there you go. This is going to happen. It is a certainty. And XRP is going to bridge this all together because nothing else is positioned to do it. It's not. And liquidity matters, trust issues, track record matters. All this stuff matters here. And so it is fascinating. Like with these central bank digital currencies, it'll be interesting to see the impact it has on the legacy financial system, because, like, understand in many ways it is like just using cash. Because understand, if you're engaging in a cash transaction, well, you don't need a third party then. You don't need a credit company. You don't need a bank. No one. It's just you hand a piece of paper money or metallic currency. I hate metallic currency. Coins, oh, metallic currency. You hand that to whoever you want to give it to, and you buy your stuff right there. It could be a friend or a family member even. There isn't even necessarily a record of it, but it happens right there. And you don't need third parties to facilitate these transactions. But outside of that, you really do. If you're using a credit card company, well, think about the third parties that are there. They got to interact with the merchant and all this stuff. Well, in a world where everybody has digital wallets, you don't really necessarily, for every transaction, need all of these third parties. And so you might think, well, banks and remittance firms and all this and so on and so forth don't want that. Well, maybe to some degree they won't, but I don't think that banks are going to go away as a result of this. Some people, maybe they really still don't want to custody any amount of cash themselves. People are still going to want loans, and so people will take loans out, and then you do need these institutions for that. Like, banks aren't going away; they're just going to have to adapt here. And so I'm not saying that all these companies are going away. Credit cards aren't going away. All this stuff, people will always want credit, but it is going to change some stuff, because if you're somebody that just has your own money, you can actually transact. Now, if you're talking about a central bank digital currency, this is something that's going to be a bit more tracked. Obviously, it's on a blockchain, and so they're going to do what they can to safeguard. And so it's not going to be as private as they'd like you to believe. but still, it's a technological advancement, and I don't think that paper money is going to go away anytime soon anyway here. But it is fascinating how all of this is evolving, how all it's coming together. It's an inevitability, but you're always going to need decentralized cryptocurrencies. There's always going to be a demand for them, and you can't solve every problem on the planet with centralized, call them what you will, central bank digital currencies, stablecoins. You can't solve every problem with that because trust is an issue. There's technology, and you need to have technologically sufficient cryptocurrencies to solve various problems, fine. But even with technologically sufficient coins, if you don't solve for the trust issue, it doesn't matter. And so you do need jurisdictionless and permissionless cryptocurrencies like XRP to solve some use cases, specifically XRP being positioned as a bridge currency. Voila, that's exactly a perfect use case. It's technologically sound. Trust is not an issue. There's a reason it's actually functionally being adopted today. All of this matters. And so that's why it's one of a million reasons out there that I just don't think that XRP is going to be going away anytime soon. And if things start to go south, I will be shouting it from the rooftops on this channel. But right now, XRP is just actually being adopted. And there are a ton of different developers building on top of the XRP ledger, all sorts of use cases. It's one of the most liquid cryptocurrencies on the planet. I just don't think it's going away. And no other cryptocurrency out there, again, is being positioned for this use case. Period. And it's actually used in commercial production today, no less. How about that? In enterprise-grade software. So I'll go ahead and wrap up there. I am not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.